Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we are going to have a discussion about the events that transpired in the markets yesterday, and that's the market's reaction to the Chinese New Year, DeepSeek. We saw a massive sell-off, especially in US tech stocks, mainly the ones that were leading in AI, such as NVIDIA, and that was a big reaction. And we'll be trying to understand whether that reaction is overblown or whether it might continue further into the US tech sector. And once we cover that, we'll also be looking at the economic calendar and some technical analysis to try and understand where opportunities may lie for the day. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So as usual, remember that this session does not constitute investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So let's get started with the economic calendar. You can see a lot of people are already joining. Hello, Robert Cavale, All Sports TV, Paul Carey, Wangari Patrick, good morning, and thank you for joining. So just giving it a few seconds for more people to join. All right. So this is what we have in the economic calendar. We had a speech earlier by SNB Chair Schlegel at 25 minutes past midnight. So we heard the SPPI from Japan coming in at 2.9%, basically missing the expectation of 3.2% and 3.0% previous number. So also we heard the BRC shop price index for the UK coming in at negative 0.7, a slight improvement from the previous reading of negative 1%. Then the NAB business confidence survey from Australia coming in at negative 2, a slight improvement from the previous reading of negative 3. So the Chinese bank holiday continues, and now we got the Bank of Japan core consumer price index at 8 a.m. So most of these are low impact news, but for Bank of Japan core consumer price index, it was major indicator of inflation in Japan. So coming in at 1.9%, up from 1.7% in the previous reading, might further cement the fact that the Bank of Japan is willing to continue hiking interest rates to address the rising inflation. So looking at the previous data and how inflation has been trending in Japan, you'd notice that there was this COVID period when inflation was on a rise, and during that period, it hit a maximum of 3.4%. But then since the Bank of Japan started hiking interest rates, what we saw was inflation basically changing and starting to move downwards, bottoming at around, I would say, 1.5%. And this was in the month of November. But then December and January numbers are showing a change in direction, with December inflation numbers showing a rise to 1.7% and now 1.9%. So second consecutive month of core CPI increase might be a big alarm, and we could be seeing the Bank of Japan being more aggressive with the rate hikes. So Spanish unemployment rate came in at 10.6%, slight improvement from the previous reading of 11.2%, and of course better than expected 11.1%, basically showing that the job market is improving for Spain. So for the rest of the day, we'll be watching the core durable goods orders from the US as well as durable goods orders month over month at 4:30 p.m. The Case-Shiller Composite 20 Housing Price Index for the US will be coming at 5 p.m. The official housing price index still at 5 p.m. Then the Conference Board Consumer Confidence Survey at 6 p.m., as well as the Richmond Manufacturing Index. So usually, when an economy is doing well and core durable goods orders are increasing in demand as well as durable goods orders, then that tends to be positive for the dollar. And of course, if business is bad and these orders are going down, then it tends to be negative for the dollar. So also for the consumer confidence survey, if consumer confidence is high, then it means that economic activity is high. In that case, we tend to see a stronger dollar in the short run. And if consumer confidence is really bad, then it tends to be negative for the dollar. So most importantly, we'll be looking at the monetary policy meeting minutes happening way past midnight. So that is 2:50 a.m. on Wednesday. And of course, tomorrow, very early in the morning, we get the inflation report from Australia, where quarter over quarter, we expect a 0.3% increase in inflation. And year over year, we expect an increase from 2.3% to 2.5% for the overhead inflation. So as for the trimmed mean CPI, we expect a 0.6% increase quarter over quarter, slight slowdown from the previous reading of 0.8%. So that is expected to have a significant impact on the Australian dollar. Of course, an increase in inflation would pressure the Reserve Bank of Australia to basically consider holding rates higher, and that is expected to be positive for the Australian dollar. But then a drop in inflation is expected to be negative for the Australian dollar. So the week is only getting more interesting. Remember, yesterday was just Monday, and we had such crazy movements in US tech equities. And today we could be seeing some further action. And of course, on Wednesday, we have two central bank decisions. One by the Reserve Bank, the Central Bank of Canada, where we're expecting a 25 basis points rate cut from 3.25% to 3%. We'll be watching the US crude oil inventories and, of course, the federal funds rate by the Fed. In this case, we expect the Fed to be holding rates at the current level of 4.50%. So if we look at the probabilities of the Fed going for a hold in the interest rate decision, in this case, we'll be checking on the CME Group FedWatch tool. So just a second, sometimes it can take some time to load. So in this case, the chances of the Fed holding rates between 4.25% and 4.50% remain significantly high at 97.3%. This basically means that the market is pricing in the possibility that the Fed will not be cutting rates tomorrow. And in that case, the expectation is that rates remain high at a range of 4.25% to 4.50%. So that being said, let's talk about DeepSeek. So DeepSeek is making Wall Street nervous about the AI spending boom, and here is what we know. So clearly, there was a big reaction yesterday. You'll notice companies such as Google were down 2.98% yesterday. If you look at SMCI, it was down 12%. That chart 11%. SOX, that is the PHLX semiconductor index, down 9%. Also, Macy's was down 0.52%. But the key highlights were NVIDIA, which was down almost 17%. We had Broadcom being down 17%, AMD 6%. Remember, these are the top microchip companies in the US, and they had quite a hit after the release of DeepSeek. So Microsoft are down 2%, but Meta had a slight gain of 1.9%. So the AI frenzy that has reshaped the tech world and commanded the attention of Wall Street took an anxious turn on Monday after a Chinese upstart burst onto the scene, dazzling AI users and sparking fears that US AI leadership is now under threat. It wasn't just the Chinese model's performance that rattled American investors and executives. The team behind DeepSeek, the AI model maker, claims that the technology uses cheaper chips and less data than the popular American AI assistants that have captivated the tech elite and the broader public. So, a foreign competitor offering a rival product at a fraction of the cost has drawn into question the exorbitant spending of American tech giants. and it has poked holes in the idea of US tech supremacy and innovation at the cost of many of Wall Street's most favored companies. So, if the most expensive and sought after AI chips aren't as vital as previously thought, an entire ecosystem built around massive AI investment could be in jeopardy. So, what is DeepSeek? DeepSeek is a Chinese startup that develops AI models. Its new R1 model, released in late January, has drawn swift praise for its performance benchmarks. Its impressive feats spurred a surge in usage. The DeepSeek app now ranks at the top for iPhone downloads in the US, just ahead of OpenAI's ChatGPT. So, if you look at the ranking right now, it's the #1 app in productivity, the most downloaded app of the last 1 week. So, American venture capitalist Mark Andreessen called the model one of the most amazing and impressive breakthroughs I've ever seen. Perhaps even more striking than DeepSeek's on-par performance is the cost of its development. DeepSeek claims that its breakthrough model cost less than $6 million to train. And that's a staggeringly modest figure, considering OpenAI's GPT model cost more than $100 million to train. So, if Wall Street had already expressed some skepticism about the AI spending sprees of US tech companies, the existence of a cheaper alternative could amplify that criticism. The broader implication of DeepSeek's usefulness is that it may undermine the current development process of AI assistance. Why should investors accept huge spending increases from US tech giants when a cheaper alternative is already available? And of course, this cheaper alternative is open source. So, how is the market reacting? The American tech company at the heart of AI growth story received one of the sharpest blows. So, Nvidia stock dropped 17%. Other members of the Magnificent Seven, who have made AI central to their growth stories, also took some damage. Microsoft fell 2%, while Alphabet and Google lost 4% on Monday. So, other chip and infrastructure players also came under pressure, with Broadcom sinking 17%. Micron gave up nearly 12%, and AMD closed the trading day down 6%. So, the financial significance of prominent tech players is weighed down the entire market. Two of the major indices were in the red, with the tech-savvy Nasdaq Composite shedding 3%. At some point, it was down about 5% before making some recovery and ending the day down 3%. So, slowdown in tech also highlighted how reliant the broader market is on Silicon Valley to continue to deliver growth. Any risk to tech's upward trajectory can have an outsized impact on Wall Street. So, we all know that last year, the Magnificent Seven companies had a big contribution to the performance of the Nasdaq as well as the SP 500. And if you removed their performance, then you'd notice that the market didn't make much of a return. So, now that we know that the Magnificent Seven were majorly driven by the performance of AI and investors betting on the development of AI, and of course, America being a leader, now seeing DeepSeek making an impressive entrance into the market, taking a dominant market share, and of course, it being cheaper and not requiring some of the top chips from Nvidia, Micron, Broadcom, and so on, then it creates a very big question in the market. And the question is, were these capital expenditures in some of these top chips as well as AI infrastructure reasonable, or were they overblown? So, Wall Street is still trying to solve that question, and as a result, that's why we are seeing out of panic selling in microchip or semiconductor stocks. And at the same time, if you look at the performance yesterday, with Nvidia down 16%, Broadcom 17%, Taiwan Semiconductor Manufacturing Company down 13%, Vistra Corporation down 28%. This was one hell of a sell-off, and we'll be trying to process that today to see whether the reaction was overblown and whether there will be some stocks making some recoveries today. So, what do we know about what has happened? Is there going to be continued demand for Nvidia chips? That's guaranteed, yes. So that means that Nvidia is still a very strong stock. So despite the sell-off yesterday, we could be looking at a potential recovery happening in the markets today. So for other companies, it might not be the same, especially the companies that have largely invested in AI models. And if those AI models continue being very expensive versus an alternative that is open source and free of charge, then in that case, their business model might be broken. So we could be seeing some further bleeding in some of those stocks. So has then the US limited the sale of advanced chips to China? And this is true. So the global battle over tech supremacy has escalated in recent years, evoking into a key theme in foreign policy. Logistic shocks brought on by the COVID pandemic also underscore the importance of domestic supply chains and protecting access to key technology. So the US has attempted to maintain its edge in advanced tech by banning the export of certain goods in the interest of national security. So cutting-edge GPU semiconductors, the kind used in building out advanced AI tools, are among the technologies that American firms are restricted from selling to China. But the early success of DeepSeek, which was purportedly developed for mere millions, indicates its engineers were able to essentially circumvent those restrictions by working with less advanced technology. So the export controls were designed to prevent or slow China's AI's progress, but in forcing Chinese technologies to work without the most cutting-edge tools, a sovereign competitor managed to develop a far cheaper and perhaps more innovative model. So in this case, China is working with whatever it was given and basically making lemonade out of the lemons that were served to them. So even using a much older version of NVIDIA's chips, they were able to out-innovate the US and come up with a much better AI model. And now the world is still processing and wondering what to do, especially with the bets that Wall Street had made on the top AI companies such as OpenAI. They're also betting on Meta's AI, Google's AI, as well as XAI. So that's it for the DeepSeek side. So among other highlights in the markets today, I'll be going through this quite quickly. So stocks in Europe set to recover. Of course, the Overblown reactions yesterday could be seeing a rather good bounce today. So Norway household consumption falls. Singapore producer prices up for first time in 5 months. So dollar rises on fresh tariff threats. Trump is still very busy with new tariffs. Of course, we know how he twisted Colombia into accepting the deportees. So Brent hovers near 2-week low. Trump's tariffs threats in focus. Japanese shares fall amid AI sell-off, and Australia business sentiment edges higher. So those are some of the key highlights in the market this morning. So of course, we'll dive deeper into some of them. One of them, the dollar index climbed 107.8 on Tuesday, rebounding from 6 weeks lows as President Donald Trump wrapped up his tariff threats. So Trump announced plans to impose tariffs on imported computer chips, pharmaceuticals, and steel, aiming to encourage domestic production of these goods. Traders also became more cautious as the February 1 deadline for the first round of tariffs, as previously outlined by the president, draws near. So, of course, we'll be seeing more tariffs before the deadline on the 1st of February. That should be later in the week. Guessing this is on Saturday. So, of course, there will be more reactions on Monday, the 3rd of February. So investors are focusing on the central bank's inflation outlook for signals on when the next rate may occur. So the dollar strengthened against a range of currencies with the biggest gains against the euro and the yen. So as we mentioned yesterday, we know that the Fed is about to make a rate decision tomorrow. So with the market expecting no change in interest rates, while other central banks are already cutting interest rates, that builds a bullish case for the dollar, and we could be seeing the dollar strengthening against other currencies ahead of the rate decision by the Fed tomorrow. So in other news, there's Brent oil. Brent crude oil futures rose to around $77.3 per barrel on Tuesday, but remained near a 2-week low as traders remain focused on President Donald Trump's wide-ranging set of tariffs. So Trump said he would impose tariffs on foreign produced goods such as steel, aluminum, and copper in the near future, raising concerns over the potential ripple effects on global demand for commodities. Additionally, his Treasury Secretary, Scott Bessent, is reportedly banking gradual universal tariffs on US imports starting at 2.5%. So on Monday, crude prices slipped 1.8% amid a broad risk-off trade led by a slump in technology stocks, as well as weak manufacturing data from top oil importer China. So while the migrant dispute between the US and Colombia has been settled for now, Trump's tariff threats against China, Canada, and Mexico, along with his calls for OPEC to lower prices and boost US production, continue to weigh on market sentiment. So overall, with the Trump bet, we expect oil prices to continue being subdued or to continue moving downwards. And the overall expectation being bearish market momentum, we had identified potential setups for yesterday, and today we could be seeing a similar setup play out. So I think it's time we jump into some technical analysis and try to understand what to expect for the rest of the day. So checking on the comment section, hello Melfin, I can see Jeff Baraza who's saying solid, Noniza Jack, Hilary Kimtai, good morning. Joseph Gisharu J Squad, there is already a question on pound yen. I'll be checking on that shortly. Also, I'm seeing a good comment here from Bumba. I'm in Uganda where my account was closed, can't find my account using UGX. So kindly reach us via live chat. We should be able to respond to these and give you a solution. So also you can email support@fxpesa.com. So getting some notifications here. Okay, that's done. So hello Willibet, Megaflex traders, good morning. There's a question on Euro USD. So ready to request pound yen Euro USD. Gideon Dongo, good morning. Also a question on USD JPY concerning the rate hike. I'm assuming from Japan. The rate hike already happened last Friday, and now we're looking at the Fed making a rate decision later this week. So let's jump into some technical analysis and try to understand where the market might be headed next. Awesome. So this is called the MetaTrader 5 trading application. It's the app that you download from the FXPesa website for trading various financial markets. So it's a multi-asset trading platform where you're able to trade currencies. You can trade stocks. You can trade equities. That is shares of companies trading in the New York Stock Exchange, the NASDAQ, as well as EU. Also, you're able to trade various asset classes, including cryptocurrencies, the latest product being Trump coin. So if you feel like the pump and dump is playing out as expected, then you can identify opportunities and look to short it. There's many other assets available for trading. And of course, if you prefer trading on a smartphone, then you have the Equity Trader, which is available on your App Store as well as Play Store. You can download it and use it to access these global markets. So let's get started with some technical analysis here. I'll be starting with the dollar index. Of course, the dollar index is a benchmark that is used to estimate the strength of the dollar against a basket of 6 other currencies, with the euro having the most weight. And of course, as you can see, the dollar index has been pretty weak for the better part of the last couple of weeks. So this has been the overall trend, despite there being a Trump bet. So the Trump bet is basically the market reacting to Trump winning the presidency and getting inaugurated, which really strengthened the dollar. But now we have been seeing the opposite happening. And in this case, the dollar has been pretty weak, save for last evening, where we saw the dollar making a very strong bounce. And today it seems to be quite bullish as we approach the rate decision by the Fed, which is expected to be happening as soon as tomorrow. And in that case, there seems to be an overall consensus in the market that the dollar might strengthen as a result of this. So seeing a very strong dollar this morning, already we can say since the market opened, this is from midnight up to this point, the dollar is up 0.63%, and this can be seen replicated in major pairs. So for Euro USD, this is what we are seeing after yesterday's high, which was around this point here. We saw the euro giving back some ground to the dollar, and now it's down 1% since yesterday's high. And now we are looking at the potential breakout where the Euro USD could break this lower trend line, which has been acting as support for a while, and continue trading lower against the dollar. So there's that likelihood we could be seeing this breakout playing out, and the euro ceding more ground to the dollar, perhaps even getting to the previous support area of 1.03526. So for pound USD, we're also seeing something similar. So after attempting to form a new high yesterday, we can see that the market already erased some of the gains made yesterday, and now it's already retesting a low that is very familiar. This is the yesterday's low, and we could be seeing the market potentially breaking below this. So it's a wait and see kind of scenario, and of course the pound being the one currency that has been the weakest since the year started, then there's a good chance that we continue seeing further downside momentum, perhaps with a very short-term target around 1.23759. So not much of an aggressive target, but it could play out and the market drops to 1.23759. So for Australian dollar, the support area already broke early this morning, and the market headed straight to a target we had identified earlier, around 0.62430. So now we continue observing the price action around this area to see if there's an extension. So for USDN, there was such a huge drop yesterday, but then in the evening, the dollar made some form of recovery, and now we are back to some familiar territory here. And by familiar territory, I mean the resistance we have been experiencing since last week. So clearly, the market has been finding some strong resistance around this area here. So anytime the market has been to this level, it has responded by moving further back downwards, and this is since Wednesday last week. So Wednesday, Thursday, Friday, and then Monday, today being Tuesday, we are seeing a similar kind of price action. So we could be seeing this playing out, and perhaps the market just retesting this area here, which was the support area that we saw on Friday. And then potentially we'll be watching as we get closer to the rate decision by the Fed tomorrow. So as for the Nikkei 225 index, market continues within this range. So the swings are still getting wilder, where the market is making big swings towards the upper side, then swings further back downwards. And now it seems like the market is consolidating a bit, but of course we understand we are on a downswing, which implies that the market could continue moving further downwards, given that the consolidation is only short-lived since yesterday's afternoon. So we haven't seen much of a price action here, but then overall we expect to see a continuation of this major move as the market remains within the pattern where it has been ranging for quite a while. So gold is the most significant one in this case. So gold has been on a pretty good bullish momentum. So yesterday, as we were doing this session, we expected the market to be bouncing from this area here and head all the way up to 2786. So while our analysis was right, it wasn't right for long. So the market didn't quite get to our target. So found resistance here and immediately changed direction and started moving downwards. And now you can see that gold is currently retesting the lower trend line, which has been acting for support for quite a period here. So now with the market potentially retesting this area here, there's the overall expectation that the market could potentially break below this area here. And of course, if there's a break, we could be seeing the market heading all the way down to around 2698, 2700 price action level. But also, we could also be seeing a bounce in the market heading to our earlier target of 2786, which was a few dollars from a new all-time high. So this really depends on the performance of the dollar. So a very strong dollar would likely see the price of gold moving further downwards. So in this case, with the dollar being pretty strong for the day, if this strength continues, then gold could continue pushing further back downwards. So we will be observing the area highlighted here in yellow to see how the market reacts to this support area. And if there's a strong bounce, we look for bullish positions, but a clean break means that we could be seeing a panic sell straight down to around 2700 price action level. So yesterday, we managed to identify a potential shorting area during the session. So we identified this trend line as a potential area to be looking for shorts. So it played out as expected. Market rallied to the trend line, found resistance, and then dropped for the rest of the session. Then late in the evening, started moving higher. The morning session was also bullish. And now we are seeing the market looking for potential areas for a short selling opportunity. So yes, there was yesterday's the Asian session low. Now the market is already finding resistance here. So we are looking for a potential area to go for another short selling trade. As we have already mentioned, the Trump bet is on lower oil prices. So in this case, we should be targeting 75.397. But then who is to tell that the market couldn't rally to the previous trend line where we identified an opportunity yesterday? So the market could rally to this point and then do exactly as it did yesterday. But then we're already seeing array short entries happening here. And if this plays out as the entry point for a short selling position, the idea is to look for a target way below yesterday's low. And in this case, looking to target 75.397 price action level, which was the previous support on this chart as far back on the 3rd of January. And of course, the 9th of January. So we could be seeing oil going into a new yearly low as soon as today or even tomorrow. So US equity indices had a massive sell-off yesterday due to DeepSeek. And this was the maximum loss for the Nasdaq, about 5.22% before it started making some recovery. So now we can already see that there was a very strong bounce. And after the bounce, it seems like the market is stuck in a low. And so far this morning, I would say, since the market opened, we haven't had much of a price action. So personally, I would think of this area here as a resistance, this area as a support, and then wait for a direction. Eventually, the market will make a breakout and we'll have a direction then. So if the breakout is higher, you go for bullish positions. If there's further panic, then you go for short selling positions. So, however, we haven't seen much from that. So the Dow is not majorly tech dominated, so it made a recovery immediately and crossed on a positive yesterday. So even if there was that large panic happening in the SP 500 in the Nasdaq, for the Dow, it was quite positive. So after the early panic, there was immediate instant recovery and it crossed on a positive. And now we are looking at a market that has been consolidating since midnight, but now we are seeing the Dow Jones breaking towards the higher side, clearly indicating that now we are headed higher. So still a very bullish signal for the Dow. So it implies that the market could be headed much higher for the day. So if you're looking to get a position in equities, the Dow might be the safest bet for the day. So the Russell 2000 had quite a volatility, a sell-off, a rally, and then a further sell-off. So this represents smaller businesses, or it's called the Small Business Index in the US. And so far, it ended the day on a negative, and today it's still really struggling to make some progress. And if you look at the forward chart, this is how it looks like. So we expected a breakout here about this was 2 weeks ago, and then a nice bounce. And so far, all we are seeing is the Russell 2000 indicating a rejection of higher prices, which would imply that the index might be headed a bit lower than the current price level. So for the SP 500, this was the big reaction yesterday. So from open, it dropped by 3% before making some recoveries. So it didn't end the day down by 3%. So from the 5 minutes chart, you can notice that since midnight, this has been the overall price action, and clearly it shows that the market has broken out to the upper side, retested, and is now attempting to push higher. So it's quite a common pattern in trading where sometimes you will have a breakout retest, and continuation. So this is using a much smaller time frame. In this case, I'm talking about the 5 minutes chart, and it indicates that the SP 500 is about to make further recovery from yesterday's sell-off. So it seems like a bullish signal to me, given what's happening. So we could be seeing some further upside potential playing on the SP 500 later in the day. So for now, it seems quite bullish for me, and we could be seeing some further upside in the London session as we wait for the reaction in the New York session. So Bitcoin, having had a pretty good start to the year, notice how since the year started, it's still up by about 9%. So this was the closing price at the end of the last year, and the current price is up about 9%. So we have had quite a number of crazy swings in Bitcoin. From the weekly chart, this is how it looks like. So notice the big swings with the lowest price in the year being all the way down on the 13th of January at $89,305 per Bitcoin. Then a very strong rally forming a new all-time high at $109,000, 539. Then a pretty crazy swing within last week. So notice last week we had these swings moving up and down, up and down, up and down in what looks like a triangle. If this was the resistance and this was the support as per last week, then it seems that we had a breakout towards the lower side, which bounced at around the support level of 97,758. And then the market started making a recovery, and we are getting right back on track. So from the 15 minutes chart from yesterday's panic low at 97,758, we are back above $100,000 per Bitcoin. And there's more likelihood that as the SP 500 and the Nasdaq recovers, then we continue seeing Bitcoin extending the recovery, perhaps towards the upper trend line. And this is a price action level of around, this is 104,728. So with the dollar index being pretty strong, the dollar has also recovered against the Swiss franc. And now we are in a very familiar territory. So we know that anytime over the last couple of weeks that we have seen the dollar gaining against the Swiss franc and getting along this trend line, we have seen a rejection of higher prices and the market dropping rapidly. So it has happened several times. This was the first time. We also saw it happening here. It also happened here. And now we don't know whether it's going to happen here or not. So we just continue waiting and see how this plays out. So New Zealand USD, clearly we had the break happening this morning. We already retesting last week's lows. So we continue observing these areas here to see if the market will be bouncing from here or even panic selling further downwards to 0.56 to 16. But then we could also be seeing a bounce from here. But given the strength of the dollar, it's more likely that we extend the sell-off to 0.56 to 16. So there was a question on silver yesterday. So we were currently testing a very strong support area here. So there was a crane break and then a bounce, and now we are seeing a continuation. So this was the big red candlestick representing the break. Green candlesticks representing the retest, and now a continuation, which implies that now we are way past the lower trend line, and this is a pretty bearish signal. So given that in the previous tops, the market was unable to form higher highs, so notice that this is a market struggling to form higher highs, which indicates that the bullish momentum here may have come to an end, and now we are seeing the market gunning for lower lows, with the previous target being 29.493. A previous support that we saw 2 weeks ago could be playing out as soon as this week. So dollar trading against the Canadian dollar, of course, with a very weak oil price, the dollar could as well make a very strong rally against the Canadian dollar. So there has been a very strong resistance around 1.44097, but now we're on the verge of breaking it after testing the level several times. So in this case, if you go to the 15-minute chart, notice that the market is really struggling to break above this area here. But then if that plays out, then we extend to 1.44691 price level. So there was a question on pound yen. Just trying to check if I have the pair here. So Trump coin still struggling to form a new high compared to yesterday's price action level. So we could be seeing some further short selling activity happening, especially after they cross the gap. The gap is about $31.38. So if we get to $31.38, it's more likely that we continue seeing more short selling. Remember, these are meme coins. They don't maintain their value for long, so should be looking to short the hell out of it. So Euro Yen, there was a request on checking on Euro Yen yesterday, so it played out well as expected. Further bearish momentum. So this morning we have had some form of recovery, but now in the current candlestick, it's basically indicating more sellers coming back in. So we could be seeing an extension of the bearish momentum later today. So for pound yen, let me try and find the chart. So also similar to what we saw with Euro Yen, so a sharp drop in prices yesterday throughout the day. So this morning, we're also seeing the same, a very strong rally during the Asian session, but now we are seeing what looks like sellers coming back into the market, which might imply that the yen continues strengthening. So given that we saw inflation in Japan on the rise, then we could be seeing a further drop here. And a drop means the pound weakening to the yen again. So we weren't able to form a new high this morning, which implies that yesterday's low might still be in play for the traders betting on the yen. So that's it for the day. Thank you very much, everyone. Thank you for your time, and I hope to see you on the next session. So there was last question on the DAX. So let's check on the DAX, the German stock market index. So Kendra, give me a sec. I'm looking for the DAX right here. Yeah, for the DAX, we saw the big sell-off playing out yesterday, but then there was a very strong recovery. But remember, the DAX has been trading very near all-time highs. So these are an all-time high that we just saw a few days ago. And now with the pullback happening with the Chinese tech, there was some strong recovery yesterday in the evening. And today, yes, it seems like it's rejecting higher prices, but I would be more inclined into looking for bullish positions given the strength of the index since the year started. So that's it for the day. Enjoy the rest of your trading. I hope you have a happy trading day. Make sure to check out the latest episode of the Bullish Banter podcast. The Financially Incorrect podcast also has a new episode. And if you're just starting your trading journey, make sure to register for a trading account using the links in the description below. And of course, if you're just learning how to trade, then visit the FX Pesa YouTube handle and check out the Novice to Pro series. So that's it for the day. Enjoy the rest of your day, and I hope you have a fruitful trading week.